Saturday, October 19th, 2019, Maneco 64, home of alternative economics and contrarian views. Today I want to talk about the U.S. National debt, how it's fast approaching the highest level ever, which was reached in World War II as a percentage of GDP, what that means, what I see going forward, in gold, the stock market, and also the fact that a rising gold price, yes, it's great for people who have been accumulating gold, for gold bugs, for stackers, for silver stackers, but at the same time, it's a symptom of a country, not only in the US, but in Western Europe, of a whole civilization moving towards third world status. And that's not a good thing. Yes, you might be well prepared and insured with your precious metals, and that's a good thing. But for the general welfare of the population, that's not a good thing. And I would say we've been seeing that already anyway in the last 11 years after the great financial crisis. The general population, the general public has had to carry the burden of a massive debt injection into the system just to bail out and keep a few thousand bankers, speculators on Wall Street, the City of London, in Frankfurt, in Paris, going and making huge bonuses, right? It's kept big corporations as well, not just the bankers, big corporations and their CEOs and their top directors, kept them well fed because they've been able to take that cheap money, which has been issued on the back of the general public, buy back their stock, and enrich themselves. Am I against free market capitalism? No, I'm not. But what we have is basically central planning socialism for the 1% or even less, right? So before I go into the national debt, let's just go over some charts of gold, the stock market, silver, and what I think is going on. So we'll start with gold. This is a long-term chart. It's a weekly chart. And I think gold is going to go higher. Not because I've always been saying that gold's going to go higher. And it's not difficult to predict that because gold is not really going higher. It's the fiat currencies that are sinking. Of course, it's not all in a straight line. But yeah, right now, as you can see, since end of May, gold has gone from below 1,300, basically a low of around 1,260. And even from last year, from just over a year ago, don't forget, in August last year, we got down to 1,160. So we've made a huge move in gold in just over a year. Yesterday, we closed around 1,490. What I see here, as you can see, is a little bull flag consolidation. Don't know how much longer it's going to last. And that's why we're seeing this range trading in gold right now. It's quiet. I haven't looked at the volume on COMEX, but I would say it's probably lower than usual. So, and that's what a consolidation is. We'd have to break up above that trend line, on top there, which is somewhere above 1,500. I would say it's above 1,500, 1,515 or thereabouts. And I just wanted to show you in the same chart, if you go back to 2011 when gold was making its run to 1920 or thereabouts, you can see there in the middle of that year, 2011 here, we had the same kind of action in gold, a flag, and look what happened after it broke from the upside. On the upside, it went almost straight in a straight line to 1920, as you can see there. Am I saying we're going to go up in a straight line to 1920 once this flag is completed? No, but it's there's a good probability that it will. So that's the technical picture for gold. Let's look at silver. Silver, it is a weekly chart, but it's a little more short term because silver still has a lot of catching up to do. As I've said in the last few weeks, the key level here is 1730, only because it was a high last year around June and April. And it was like a double top there, and we've gone back above that level. So the fact that we're holding above that level, I know we've broken below that, but it's picked right back up. We closed at 1755. So that's the technical picture for silver. Stock market, I'll look at the Dow futures. Before I look at a shorter term picture, just want to show you a monthly chart of the Dow going back to around 1998, 1999. Yeah, that chart, I mean, that's not a bottom, is it? I mean, that looks like a top for me. The only thing that I would say is that when I talk about the national debt, you'll see that the more the national debt rises, the higher the Dow goes. So we could still continue to go higher if they're able to keep ramping up the debt, which they could with the Federal Reserve printing, even though we're starting to see a lot of criticism, even from within the top of the pyramid, so to speak, like from central bankers, from insurance companies, from big investors. They're starting to question this policy of money printing, zero interest rates or negative interest rates. I even saw Jamie Dimon said that negative interest rates are irrational, and for once I agree with him. So we need to keep that in mind. What about the shorter term chart of the Dow? Let's have a look here. And by shorter term, I don't mean just a week, but the last 2.5 years or so. As you can see here, we're still having a very tough time getting momentum to continue going up. Yeah, the national debt is increasing, but it looks like, as I said, I think yesterday, the marginal utility of that debt is decreasing. So that's a problem there as well. Will the stock market always keep going up as the national debt goes up? There might be a limit. And as I said, so we've reached, I know it's at all-time highs, the national debt in nominal terms, almost 23 trillion. But as a percentage of GDP, we're almost at the all-time high, which was reached World War II. And you might say, what's the problem? Japan has 200% of GDP debt. Well, the thing is that Japan is a creditor nation. The US has become a debtor nation. During World War II, of course, in the aftermath of World War II, and also from World War I, the United States, of course, became the biggest creditor nation in the world. It had almost 3/4 of the world's gold at the end of World War II. So America had the wherewithal to have all that debt as a percentage of GDP. And don't forget, all the economy had been geared towards wartime. So when the war finished, you had to rebuild the civilian economy. So even though America, of course, was not destroyed like Germany or Japan during World War II, they still had to rebuild the civil economy, right? So I've got two charts here for that. One is from 2012. The source is the Congressional Budget Office, as you can see there. They're saying that the debt to GDP, public debt to GDP, was 112.7%. So that was the highest ever during World War II. And you can see that the previous wars, World War I, the Civil War, Revolutionary War, we got up to like 30% of GDP in terms of debt, right? I'll show you a latest chart that I've got here, and the source is the Heritage Foundation, and its calculations based on Office of Management and Budget and Congressional Budget Office data. So they've got here percentage of GDP for 1946, just in the aftermath of the war. They've got 108.6%. So it's around 108 or 112, let's say. They were forecasting 101 here, as you can see, for 2021. So this is not an up-to-date chart, because as you can see here in the usdebtclock.org website, we are at 106% of GDP. So that's why I said in the beginning of the video, we're almost at wartime levels. The only difference now to during World War II is that the U.S. is now the biggest debtor nation. The U.S. Doesn't have 75% of all gold reserves, sovereign gold reserves. We don't even know how much gold the U.S. has, compared to, as well, for example, 1980, when Paul Volcker had to allow interest rates to go to their natural level, market level, which happened to be around 20% for the short-term rates and about 16% for the 10 years. Well, the national debt then to GDP was 34.68. So America had a lot of room on the upside, even though it was still way above, how can I say, levels that we had seen in previous wars, with the exception, of course, of World War II. So 1980, the national debt was under $1 trillion. It was just under $1 trillion. Yeah, and Paul Volcker had, how can I say, he had the tools there to do it. Now, America doesn't have the tools to fix the system. It has to keep trying to keep this debt bubble going. And the major reason is because the debt to GDP is already really high. They haven't won a war, really. They don't have a war dividend like they had after World War I and World War II. You have to understand, it wasn't just World War II, sorry. World War I was a great war for the U.S. I'm not saying it was nice for the Americans who died in that war. America did fight in that war, of course, towards the end. But American multinationals, American companies made a fortune. A lot of millionaires were created from that war, and it kept going. And the same thing for World War II. America now does not have a war dividend. If anything, America is in debt to the whole world, right? That's where we are right now, and this is not just for America, it's also for the UK and a lot of Western European countries, of course. What do I think about the stock market? Can it keep going higher? Well, as you saw earlier from that chart of the Dow, it's getting harder and harder to push that market higher, in spite of the fact that we're seeing more and more debt created. We're seeing a budget deficit to GDP of almost 6%. $1.2 trillion was the last amount of debt created in one fiscal year. $1 trillion deficits now are becoming normal. So yeah, not looking good. So what's the solution to all this? Unfortunately, I think we are at a place where in order to fix the situation in the US and around the Western world, places like the UK, Ireland, of course, also has a lot of that, Japan, France, Italy, Germany, not so much. They don't have as much debt, but they're going to hurt as well because they depend on exports. The only way now, I think, to go back to a sane, sound money system is to have a collapse. Because it's clear to us that the powers that be do not want to reform the system. If they did want to reform the system, They would have done it in '08, in the collapse of '08. They wouldn't have bailed out Wall Street. They wouldn't have lumbered the general public with all the debt that it has. And I disagree. A lot of people, even in the alternative like media or like on YouTube, who think a lot like me. They say, well, yeah, it was all right. They had to do QE1, but no, they didn't have to do anything. They had to let the bad actors on Wall Street go out of business. That's the only way out, and it depends a lot on the general public, right? And why do I say that? Well, the general public needs to wake up and realize that they're being taken for a ride for many, many, many decades, I would say. I'll reference an article written by Howard Buffett. Howard Buffett was a congressman from Nebraska, and he wrote this in 1948. He also happens to have been Warren Buffett's father, right? And this is what he said in that essay about the taxpayer being the forgotten man. So I'll read from his article. It says, "Far away from Congress is the real forgotten man, the taxpayer who foots the bill. He is in a different spot from the tax eater or the business. While the business is the big banks and the big military, industrial, technology, how can I say, complex, right? That benefits from these trillion-dollar deficits, all the wars, all the endless wars, right? Because America doesn't win wars anymore and get a reward for it, right? It just keeps fighting wars, lumbering the costs on the taxpayer, while the businesses make millions. I would say billions now, right? This was in 1948. Billions was a big number back then. So, yeah, so he says, from tax eater or the business that makes millions from spending schemes. He cannot afford to spend his time trying to oppose federal expenditures. Yeah, he can't lobby. He doesn't have the resources to hire lobbyists, right? Like the big corporations do. He has to earn his own living and carrying the burden of taxes as well. But for most beneficiaries, a federal paycheck soon becomes vital in his life. He usually will spend his full energies, if necessary, to hang on to this income. The taxpayer is completely outmatched in such an unequal contest. Always heretofore, he possessed an equalizer. If government finances weren't run according to his ideas of soundness, he had an individual right to protect himself by obtaining gold. Don't forget, back in 1948, Americans couldn't own gold anymore. It was illegal, right? It was from 33 to 70, end of 74 that you couldn't, right? So it says, with a restoration of the gold standard, Congress would have to again resist handouts. That would work this way. If Congress seemed receptive to reckless spending schemes, depositors' demands over the country for gold would soon become serious. That alarm, in turn, would quickly be reflected in the halls of Congress. The legislators would learn from the banks back home and from the Treasury officials that confidence in the Treasury was endangered. Well, there is no alarm anymore, right? And the Federal Reserve makes sure there is no alarm anymore. And they enable this to happen. So the Federal Reserve is not independent at all. The Federal Reserve is an arm of big corporations and government. And it's not working in the interest of you, the public. I'll continue. Congress would be forced to confront spending demands with firmness. The gold standard acted as a silent watchdog to prevent unlimited public spending. Well, there you go. Gold was a watchdog. They killed that watchdog, right? I have only briefly outlined the inability of Congress to resist spending pressures during periods of prosperity. What Congress would do when a depression comes is a question I leave to your imagination. I have not time to portray the end of the road of all paper money experiments. It is worse than just the high prices that you have heard about. Monetary chaos followed in Germany by a Hitler, in Russia by all-out Bolshevism, and in other nations by more or less tyranny. It can take a nation to communism without external influences. Yeah, that's interesting, that comment, especially with what's happening today. Suppose the frugal savings of the humble people of America continue to deteriorate in the next 10 years as they have in the past 10 years. Someday, the people will almost certainly flock to a man on horseback who says he will stop inflation by price fixing, wage fixing, and rationing. When currency loses its exchange value, the process of production and distribution are demoralized. That's the thing. You see, is when the money dies, right? For example, just look at Venezuela. For example, we still have rent fixing, and rental housing remains a desperate situation. For a long time, shrewd people have been quietly hoarding tangibles in one way or another. Eventually, this individual movement into tangibles will become a general stampede unless corrective actions come soon. Well, I guess Mr. Buffett was early because they've been able to keep this going for a very long time. 1948, he wrote this. So, but I think we're getting to a point where there will be a stampede into tangibles, and I think the price of gold and silver will reflect that, cryptocurrencies as well. So there you go. We're almost at wartime, World War II time highs in terms of debt to GDP. Looking at the stock market, it looks like it's having a tougher and tougher time translating all that extra debt and deficit spending into new highs. So we're in interesting times. And it's no consolation. I grew up in Brazil, and I know what currency collapses are. I know what it is like to live in a third world country. Seeing a lot of the general public live in misery, it's not a great thing. And unfortunately, I think that's the way we're going, not only in the US, but the way we're going in Western Europe as well, and the UK included. It doesn't matter about Brexit either, I would say. Of course, this doesn't sound great, but it doesn't mean you stop living your life. You just have to be aware of these things, in my opinion. Unfortunately, a lot of people out there will not be aware of what's happening. And that's one of the reasons why I do these videos, and to try to wake people up. I know I don't have a huge reach, but one person is better than none, right? If you enjoyed this video, make sure you hit the like button. Make sure you share it far and wide. If you haven't subscribed to the channel yet, think about subscribing. You can also follow me on Twitter, Steemit, and on DTube. I wish you all a great day. Take care. Bye.